Where are prices going for houses and for condos in Panama City Beach? It's a question I'm getting all the time. I'm Craig Duran with the Duran Group over at Berkshire Hathaway Home Services. I'm going to do this video a little bit different. The January 2023 numbers are in for the market, but because December is generally a slower month for sales, I wanted to step back a little bit, and instead of going neighborhood by neighborhood, we're going to talk national news for a second and then go deep into Florida and then talk about the PCB and the local PCB housing and condo markets to show you the numbers from January to see what we can sort of expect going forward. So let me start this little presentation for you. So one of the services we use to compile information to track the market it comes from a service called Keeping Current Matters. And one of the things they've been tracking is right here. They've been tracking the spread between the 10-year Treasury yield and the mortgage rate. And like this slide says, for 50 years, the 30-year mortgage rate has moved in unison with the 10-year Treasury yield. Not terribly surprising to those of us in the business, but their point in this is that the average spread is 1.7. Their next point is here. Look at the middle column. This slide is from about 2 weeks ago, but I think the idea is still relevant. The numbers might not be exact, but that orange number is the most important. What they're saying is today we're at a spread of about 2.79, and they attribute that to a little bit of fear and a little bit of apprehension in the business when it comes to pricing out mortgages. That if it was a normal spread like it has been the last 50 years, the mortgage rate would still be about a point lower. But they also have a point that look at what's happened in November and December. Let's start in February. February, the number was hovering around 1.8, the normal spread for the last 50 years. And from March to almost beginning of November, that number crept up and crept up. More fear in the markets, bigger spread. Hey, we're going to have higher mortgage rates. There was so much apprehension. It got as high as a 3.2 spread or a little bit more than that. It's starting to come down. What Keeping Current Matters contends is that fear is subsiding a little bit, apprehension subsiding a little bit. We still have about a 1% difference from the average. Things are coming down. In their opinion, mortgage rates are still a little on the high side because of that, but it's something interesting to watch. Dr. Brad O'Connor, Florida Realtors chief economist, Jacob from the Duran Group, attended the Florida midwinter meetings for the Florida Association of Realtors a couple weeks ago in Orlando and saw a really great presentation from Dr. O'Connor. We took a couple slides from his presentation. What he says here, all of the current forecasts on existing home sales in 2023 rely on where the 30-year mortgage rate is going to be, and that's in flux. I sort of laughed when I saw this because it's like the expert economist sort of hedging his bet that says like, well, I really don't know. It's going to depend on what happens with mortgages. I'm recording this 2 hours after the Fed funds rate they raised it only a quarter of a point this time, which is encouraging because now they're raising that number less. Feels like from their perspective, fears are subsiding. Things are stabilizing a little bit. Lawrence Yoon, chief economist for the National Association of Realtors, is saying here that the upcoming months should see a return of buyers as mortgage rates appears to have already peaked and have been coming down since mid-November. I have heard some of the talking heads talking like March, April might see a little pop in the real estate market from some pent-up demand because people have been sitting on the sidelines waiting for those rates to come back down a little bit. David Stevens here, former Assistant Secretary of Housing, says, so be advised, this may be the one and only window for the next few years to get into a buyer's market. And remember, as the Federal Reserve data shows, home prices only go up and always recover from recessions, no matter how mild or severe. Long-term homeowners should view this market right now as a unique buying opportunity. Interesting perspective, since there is a little bit of a softer market, and certainly in some sections it is a buyer's market. If mortgage rates come back down, things pick up again, it's an interesting idea. Home price forecasts here by a few different sources. You can see Realtor.com here is represented, National Association of Realtors, Freddie Mac, Builders Association, Fannie Mae, Zelman and Associates. One of the things Keeping Current Matters talks about here is that there's really no consensus, one thing, but also that in a positive way, there's no massive consensus that there's going to be just this massive housing crash. We don't see, 1, 2, 3, 4, 5, 6, 7 experts predicting 10 or 15 or 20% depreciation. It's just very, very unlikely. Pretty encouraging that we see mostly flat if you average this out. Dr. Brad O'Connor in Florida thinks, along with that last chart, we expect the state's residential real estate market to return to a more typical pace. Remember from our previous videos, 4 and 5 months of inventory represents a neutral market. That's the pace he sort of starts to think we're going to get back to. I believe 2023 will look more like the traditional housing market years of 2018 and 19 in Florida as supply and demand become more balanced, just like we're talking about week to or month to month. And one reason I really like to go neighborhood to neighborhood, condo project to condo project, to see exactly where that number is, because it has everything to do, especially if you're selling, with maximizing on your price. Couple of charts here. So the Gulffront condo market for just the units built since 2006, I pulled this one chart to get some sense of the newer buildings. The red line here represents the number of sales. The black line, or the red line, represents the number of units for sale, The black line represents the number of closings. Not surprising to see January sales number tick down a little bit, because think about that. If you were closing in January, the contract was probably written late November or December. Late November and December, plenty of people are distracted doing other things like the holidays, some vacations and things like that. But one thing worth watching, months of inventory ticked up from 3.97 to 8. 8 is very much a buyer's market. If you look at 2 of the last 3 months, we're at 7.4 and 8.06. Very much buyer market territory. The longer we linger there, the more pressure there is on pricing to come down. So if you're thinking of selling and capitalizing on the spring market, a couple things to think about. We're waiting a little bit to see what happens the next 30 to 60 days. Do we have more units come up for sale and more buyers come in? That might help this out a little bit. But if not, pricing gets super, super important. You have to price very, very close to the market. And your presentation is that much more important. So your marketing better be great. Make sure you're digging out all of your rental history. A good, solid rental histories can be a big differentiator in selling something. Making sure that the unit is right. If there's something that needs to be fixed or painted, or a furniture piece changed out, or even like I wrote a couple weeks ago, the carpet pulled out and show the tile that was underneath. All those things become that much more important. Remember, buyers have so many more choices, so those things are that much more important. Detached single family market, similar story. A little less supply if you follow the red line, but a little tick down in closings in January. Similar story here. We ticked up from 4.6, which is about a balanced market. It had been a balanced market for about the previous 4 months. We're up to 6.9, which is very much buyer market territory. I'm going to be interested to see February numbers to see how much we recover. I wish I had those already, because the last 2 weeks in January so far have been really, really busy. So if we keep this momentum, I feel like we have some momentum and we're going in a good direction. But it's super important to pay attention to those numbers for sure. A couple things, I don't know if I mentioned at the beginning, housing and condo market. In housing, we do have a new neighborhood. A lot of us have been watching to see when Ward Creek would become available. Ward Creek, for those of you who don't know, is just up the road from where the new hospital site is on Highway 79 in Panama City Beach. Floor plans are available now. There'll be single family homes and townhomes. Pricing is not out yet, but there is a plat. So if you're interested in some of that, please let me know. On the condo market side, again, next week, I'm going to record a video and do a deep dive into the new law that's affecting homeowners association fees and possible assessments and things like that. So be on the lookout for that. Beginning of March, I'll be back with individual updates for your particular neighborhood and condo projects. If I'm not doing your particular neighborhood condo project on a regular basis and you would like that, please let me know. My cell phone, best way to get a hold of me, 850-527-0221, just a direct text message. Or phone call is easy. I'll get you into our system to make sure you're being updated with which market you'd like to be updated on. The point, I think, the main takeaway from all this is that all these moves and subtle and not so subtle moves in the market will be very dependent building to building, neighborhood to neighborhood. One building right now in condo project might have a major assessment going that's going to affect its values for a while, and another one might not. Neighborhoods have things going on in them that create a little momentum here and take some momentum away over there. So all of these things matter, which is why we're tracking the data, so that especially when it's time to sell, that we can help you maximize and get the highest price, because we understand the market we're selling in. So I hope you guys found this helpful. I know it was a lot of detail in 10 minutes and 31 seconds. But again, we'll be back next month with updates. If you have any questions in the meantime, feel free to reach out. Again, I'm Craig Duran with the Duran Group at Berkshire Hathaway Home Services. Thanks for watching.